Afternoon, and thank you everybody for joining our tax talk today. I'm really happy to have a really good friend of mine on today, Jim Greisch. For those of you who don't know Jim, Jim is also a retired CPA, in this case from RSM LLP, and Jim is a Creighton graduate. I won't give the year, Jim, if
Thank
you
you.
don't tell him my year. 1 year after I graduated from college. Jim retired from RSM in August of last year, where he was not only the managing partner locally, but served in both a North American leadership role and a global leadership role, particularly around financial services. The history is that Jim and I have been friends for a long time, competitors and friends and colleagues in the industry. Jim, you and I have been working on and talking about tax modernization in Nebraska. I was thinking about it today for at least 10 or 12 years at this point. And Jim and I are not only good friends, but we agree on most things. There's a few things we disagree on. Usually most of the battles are on handicap and how many strokes one should get on the first tee or not, but those seem to be our most difficult exchanges. But we've both been very active thinking about Nebraska's tax system for some time, and I think we're going to, Jim, take that discussion and take it a little deeper today in terms of how we got to where we are and where we're going. And I'm going to start with this, which is the blueprint process and the need to be competitive as a state. I mean, if I take that blueprint report, which was generated by literally countless hours of hundreds of people, thousands in many regards, but certainly hundreds who worked multiple days developing that report on how Nebraska can continue to compete and succeed and win with our peer states. And basically, there were several areas where we needed as a state to make substantial changes, certainly in terms of people and workforce attraction, which didn't surprise any of us. I think the one that surprised me was the need to really focus on attracting investment capital in technology companies and innovation and building the technology side of our state and the productivity numbers that come with that in our core industries: agriculture, manufacturing, transportation, banking, finance. Those came out clear. And then one other point was taking a look at how we become more efficient at government, both on the spending side, but also more competitive on the tax side. And we've not been competitive for a long time, particularly in income taxes and property taxes, where we've been in the bottom half of the country and sometimes in the bottom 10 in property tax and bottom 15 in income taxes. And so with that, Jim, I'm going to turn this back to you for your view of the blueprint process as it came about. And is it important that we rank high or competitive in income tax rates and rankings that are out there?
Yeah, Brian, that's a popular question, from our legislative colleagues. And my answer to that is yes, it is important that we rank competitively. It is not necessary, probably unrealistic given, the pain that it would cause to get into the top five, because the top five all have unique circumstances that are only present in a handful of states. That having been said, competitiveness is defined, by the site selectors and the people who look at states to make investments in a way that makes it necessary for us to have a definition of competitiveness that works for us. And what Blueprint did is gave us, kind of a roadmap for 15, 16 items, counting taxes, that, define our ability to compete for the things that we think are instrumental in creating the future we desire. The people, the places, the government, the sectors, jobs, quality of life, the nature of the population, what they earn for the effort that they put forth, and how we stimulate an economy that grows through research and development and continuous investment. We're all a part of what creates, going forward, the vision of competitiveness against the states that we have to compete with. And, the important thing for us, I think, as Nebraskans, is we can't stand still. We've kind of been stuck in the same mode with a little bit of a concrete boot on since 1967. And the efforts that we've made to, fix, modernize, change that 1967 launching pad, have not really been very effective. And you only have to look as far as what's happened in our surrounding states over the last half decade to see substantial investment in the concept of competitiveness and change to become competitive. No one would ever say to you and I that Colorado is a conservative state these days, but a 4% flat tax rate really looks pretty darn good across the border. And there are a lot of things about the change that their legislature did that are extremely competitive. But every other state around us has done something to improve their competitiveness. And looking to our east in just the last legislative session, goodness gracious, Governor Reynolds took us to task, and we should be paying attention to what's happening in Iowa. Serious attention to what's happening in Iowa.
Yeah, I thought Iowa was a definite wake-up call, maybe even more than Colorado. They're moving towards a 3.9% flat tax in Iowa, and I think important for two reasons. One, the state's economies are very, very, very similar. The cultures are very similar. But secondly, Iowa was always that state when we looked at peer states around us that had higher rates than we did.
Yep.
And so we could always point to Iowa and say, we're not the highest tax rates in the neighborhood. And when Iowa made that move, suddenly we were, which really begs the question. You and I both were in private practice in the accounting and in my case, legal world, but always in the tax field for me for over 30 years, both of us. And the question that I often get asked in Lincoln is, well, do tax rates matter in terms of attracting people and capital and business investment? Do businesses really invest because of tax rates, or is it because of other things? And does workforce really move because of tax rates? What are your views on that one?
Yeah, I get asked that all the time. And, I always say yes to that question. And that's based on experience. I think most of our listeners know that, for a period of time, you and I both served former governors and the current governor in economic development activities. And as the chair of the Greater Omaha Chamber's Economic Development Council, I had a unique opportunity for a period of a half decade to really be at the table with the people who were making those choices. And you only have to be there once when a CEO looks across the table at you and says, now, Brian, tell me again what this is going to mean to my employees. Not to me, but to my employees. If I move people here from a state whose rate is lower than Nebraska, and you're starting to tax them at the maximum rate of 684 at $30,000, give or take, of taxable income, that's a significant detriment to my employees who are going to be moving from a state that has a different philosophy. And by the way, most of my employees own property. We want them to invest in our communities. We want them to be active in our communities. And the majority of them do that by purchasing a home and investing in businesses that support their family. Tell me about your property tax system. Rarely did I ever get a question about sales tax. It did come up because we are unique in that we have so many things that are exempt from taxes. But sales tax, transactionally based taxes, broadly consumption-based tax. I want to be careful not to call it anything other than a form of consumption tax. They come up, but that's not really the driver. The driver, income and property tax, make a difference. And it's popularly said that income taxes don't matter. And I don't think anyone who's ever sat across the table from someone thinking about moving to Nebraska who's asked that question, and no one would ever say it doesn't matter. It does matter. It does have an impact on their people. And because it has an impact on their people, often a negative impact, it is an extremely difficult impediment to overcome. Now, you got to solve the other problem. Obviously, the state only has a role in income and sales, doesn't have a role in property taxes. Local governments are responsible for that. But the nature of that beast has to be attacked in a way that creates an opportunity for us going forward to be more modernized and be more in step with the economy that is emerging at warp speed going forward. I mean, just in the last 10 years, in our careers, fintech emerged good grief, it's taken only a handful of years for the concept of something tech, ag tech, blank, health tech, and insure tech, fintech to become, de rigueur, accepted everywhere. We've missed that opportunity for substantial investment in Nebraska, with limited exceptions in agriculture. We have to create a different view of how we attract those people who are willing to make investments in the kinds of things we can do in Nebraska in a big way. And it matters. Income taxes matter. By the way, I'm not talking just about individual income taxes. Corporate income taxes matter. And the popular myth that we could tax corporations because they can afford it belies the fact that all taxes are paid by consumers. So if we raise corporate income taxes, the concept, the consequence is worse, because our citizens, our employees, the people pay the tax. And if the prices rise because tax rates are high, and no one should think that corporations don't embed that in their models, we've just missed the boat. If we could eliminate corporate income tax, that would be a real benefit for us. We don't really collect as much as people think in corporate income taxes. I mean, I realize that several $100 million is a lot of money, but in comparison to the state's budget, not very much.
Yeah. Jim, I'm going to do a first on Tax Talk. I'm going to ask Jenna to bring me a Diet Coke, because I'm still choking on something I ate for lunch. So we'll get that one resolved. Let me talk about that, because I think, and certainly in the legislature, when we talk about corporate tax rates and business tax rates, the examples that constantly get thrown up are the big Fortune 500 companies. And the question is, aren't the big Fortune 500 companies always going to invest the same in Nebraska, regardless of tax rate? I quite easily, from my practice with Fortune 500s over the year, I can say no. They look at return after tax, return on investment, just like anybody else. But one thing that came out of Blueprint that really is important in this regard is, saved by Jenna as usual. One of the things that's really important is innovators and entrepreneurs. The report was very, very clear on that one of the key elements of our economy for the next 10 or 20 years is our ability to attract innovators and entrepreneurs, in this research that you were talking about, even at a small level. And that we actually ranked in most of those categories in the bottom 10 out of 50 states. And for innovators and entrepreneurs, somebody who's developing a software company, somebody who's developing an app, somebody who's developing machinery with high tech, whether it be ag or fintech or transportation tech or you name it. If you're going to develop that company and ultimately take it to an IPO or sell it or do anything else with it, that tax rate makes a difference. And I've always told people there's a reason that Austin suddenly became very, very popular for these kinds of companies, because they had a 0% tax rate at the end of the game when you finally built that successful business. Agree or disagree with that?
I do actually, I think it's actually twofold. So in the incubation phase, so at the moment the idea is hatched, it's now out of the garage. It's out of mom and dad's house. It's an actual business. Most of those are pass-through entities, S corps, partnerships, and of course the way that they pay at the highest income level and rate, in Nebraska very quickly. It doesn't take much, $30,000 to be right at the top. At the point in time at which they convert from pass-through to C, that choice had in Nebraska a fairly consequential impact, 100 basis points, and that 100 basis point difference on, say, $100 million net gain is not chump change. And people made choices when their accountant, their lawyer, their advisors, the iBankers, the merchant banks said, hey, why are you paying 100 basis points increment, to be in Nebraska? Is that really the right thing? And it did depress our investment in the innovative ecosystem that we were looking for. I often refer to it as the innovation ecosystem, because it's the process of innovating that we're trying to keep here and incent by making it more attractive to be here at the beginning, the middle, and the end. And that ecosystem, 100 basis point penalty at the end because you're gonna be in Nebraska and you're gonna take a company public. That doesn't look very good. That's an ROA, ROE, ROI, drain, and it's very bad for our system, for the perception of Nebraska and our willingness to invest.
I think this is the second overlap between where the tax code and this workforce issue overlap. One was obviously, we talked about it earlier, just simply attracting people to come to Nebraska and work and live and stay in Nebraska. The second piece is this technology piece. It's clear with the younger generation, and Blueprint was really targeting 18 to 34-year-olds as our future. It's our ability to attract them. They're looking for environments where not only is there a thriving economy, but a thriving technology economy. And that's sort of becoming table stakes for attracting this group. And so this is really important. So I'm going to move us to the Blueprint report, because I know you and I agree on all of these big concepts. You headed the efforts in the Blueprint effort to really develop an initial proposal on tax modernization. And it was, as I understood it, it was very much sort of a clean slate, which is what you and I would both argue we need in this state ultimately, is sort of a clean slate of taking a look at the tax system. How do you make it as effective as you can? Why don't you take us through sort of top level at 100,000 feet, what you and everybody that was working on that Blueprint plan was thinking about in terms of these big policies we talked about, and then how that developed into the plan that ultimately you guys released last year.
Sure. So, the process of taking a blank sheet of paper, and blank slate, as you refer to it, and creating a new ecosystem for the maintenance of services that are constitutionally provided in Nebraska, really allowed us to look at the ways in which we generate the necessary income to support the things that are done in Nebraska. We expanded the definition of constitutionally provided to include things which have become accepted as part of what government must do. Think, education in the form that we have it in. So community colleges, K to 12, a vibrant university system, getting the picture. And then we also added in the things that make great workforce attraction. Do we invest in housing? Are we thinking about how we incent a young workforce to mature in the process of becoming, moving from being a student into being a member of the workforce? We also looked at the things that create vibrancy in an economy. We looked extensively at equity. What looks and feels like the fairest system, not a fair tax system. I want to differentiate really quick. We're not talking about a fair tax, the fairest tax system. And we landed on a handful of must-haves. So the must-haves were, we have to have a tax base that is as broad as possible, because the broader the tax base, the lower the regressivity. So anything we did was designed to provide fair outcomes to all consumers. Now you ask yourself, well, where does that manifest itself? Because we're really not talking about property taxes. The state had no role in that, so we had to leave that on the side for the moment. And then we looked at things that we tax in areas like sales tax, so transactionally based taxes. And there were a lot of things that were unattractive about what we did, and lots of things that we could make more attractive. So we started the conversation literally by saying everything's in to consider for taxation except for business inputs, because we weren't interested in creating a layered tax effect, VAT tax, or a fair tax system that moves an entire country in a particular direction. That led us to some interesting choices that I'll come back to. We then stepped aside and said, what's the problem with our income tax system? And of course, the immediate issue very quickly became extremely high rates attaching at a very low level. Now, had we not had to make political trade-offs, you would have seen from us a flat tax. And in fact, the report that we generated actually has a two-tiered flat tax system. I happen to be in favor of a flat tax. I think that is the most equitable mechanism by which to tax income. There are many who disagree with me, but the economic studies, they're almost universally in favor of the equity of flat tax. Now, what we chose to layer into that conversation was an exemption for income up to a particular level in order to incent investments in the things that were going to change the future of Nebraska. So at $50,000 for a single person, 100 for a married couple, and a single person, 50K is basically double the standard deduction that's available on the federal system. We chose that because in parts of our state, we needed to incent the ability to invest in housing. We needed to incent the ability to invest in other things that were going to create vibrant economies west on Interstate 80 and then north and south off of Interstate 80. And it was perceived by our team and supported by our economic research that not taxing income until a specified level, so 50 and 100 for individuals and married couples, created an opportunity to put a lot of cash into the system that spins through the economy at a very rapid rate. So every dollar invested, we've seen the studies, 2.5 times, movement through the economy. Well, every one of those 2.5 times has an opportunity for sales tax to occur. So the choice becomes the consumers to make. The consumer then decides how they're going to spend the income that they have at their disposal. And because the broadest sales tax base created the fairest and most equitable outcome, we had an opportunity to change the way the state thinks about funding its basic services of government constitutionally mandated. More could come from sales tax than had to come from income tax. And that trade-off was roughly $1.5 billion to $2 billion. The economic modeling we've done has proven that the system can work. There's no question that there are political choices that are going to be difficult, and it would have to be, discussed. And everybody needs to remember that Blueprint was a plan. It was not the plan. It was not necessarily even the preferred plan. It was a plan in order to stimulate conversation. And the challenge that we have is we have a system based, now for 55 years that, has given people, I'm going to use some, somewhat words that are somewhat controversial, a free pass by not having to pay sales tax on things that in any other state would have likely been taxed. Now, we did bring some things in, Brian, as you well know, that were going to be politically controversial. We did that on purpose in order to force the conversation, and the trade-offs that had to be made in making the plan work necessitated that we alter rates in order to create some balance. What the plan did and does show that, what happens is the wealthiest Nebraskans who have the disposable income to spend on whatever they particularly like, drive a lot of the increase in sales tax because they spend some money. What happens at the lower end is they spend it more on needs, less on wants, and some of those needs, now taxed that they weren't before, do create an economic vitality. What was interesting about that study is that in every county across the state, except one, Banner County, there was an opportunity for an increase in the amount of income available in each county to do the things that create the functions of government. Said differently, a different cash flow stream gave us an opportunity to then look at property taxes and lower them by a measure that changed the dynamic going forward. And what that did for us is got the state out of a place where it never should have been in my opinion, in the first place, which is, property tax credits, which apply for property holders, but not anybody else. What we did in our deliberations was to try and create a mechanism that gave everyone across the state an equal opportunity to not only participate in, but also to share in benefits and costs necessary to run the government. I get that sometimes that was an unpopular thing in the rotunda and in the legislature. Certainly the lobbyists didn't like it, but it created a lot of opportunity, and the data was very compelling to suggest that it worked.
So Jim, in a nutshell, let me clarify a couple things on this too. So generally speaking, you're moving through elimination of sales tax exemptions, revenues to reduce income taxes, and I'll contrast this to the EPIC tax proposal, which was just a consumption tax proposal, which essentially would have the state collecting all taxes and then making all spending decisions rather than local control. The Blueprint proposal has a I'll call it a windfall, you'd use a different term, but a windfall to the local governments, in that local governments that have local sales tax regimes will also see a sales tax pickup. And as I remember your proposal, that then that sales tax pickup was to be used locally to help reduce the tax burdens, presumably
Yes.
property tax burdens in the local
Only property
jurisdictions.
tax. Only property tax. So
Right.
every dollar that came in of a particular type was going to have a legislative action that required it to be a dollar for dollar reduction in property taxes.
And leaving local control over spending decisions.
That's
In
correct.
that process.
That's correct.
And then the other big piece was, I think, among your, and you did what I think we once called an academic approach, where you have a lot of sales tax exemptions that were deleted that may or may not be deleted in a legislative process. But you also included taxation of services. And I thought I might get just 30 seconds from you on why you included so many services in the sales tax.
So services are the most rapidly growing area in almost every economy, and the absence of taxation on them creates, a somewhat interesting dynamic. Services is a broad category of things that, as you well know, have roughly 45 components to them. There are some that are considered business to business that would be classified as business inputs. They would not be taxed. So what we really were looking for is consumer-based services that are where consumers are making choices about the services that they purchase. The tax on those is, of course, the trade-off to create a mechanism to fund the functions of government in a manner other than property taxes. Now, why is that choice economically appropriate? It's because everybody participates, and only property owners pay property tax. That choice generated literally hours worth of debate, and we landed on the choice to include services because we felt it was the fairest way in order to create a vitality going forward that enabled us to do what was required within the Constitution to keep Nebraska moving forward.
So Jim,
you're absolutely correct. Most of them probably wouldn't have survived a legislative discussion, but it creates an interesting conversation. And the irony for me, and I think it was shocking to most of us, is when we studied these exemptions, Brian. I think you heard me say this many times. We used a pretty standard business person's evaluation. What's the ROE on the exemption that we've identified? And we did it in two ways: individually, and then we aggregated a couple that we thought went together. Sadly, I have to tell you, there were none on an individual basis that produced the threshold rate of return at 7%, consistent with what I think most of us would have said is a reasonable hurdle rate. Aggregated, there were a handful. We certainly have to acknowledge that in some parts of the economy, there are ways to create vitality by grouping things, and there were a couple that had sufficient rates of return. But we got hundreds of exemptions, and when you start looking at hundreds of exemptions and a clear minority paying for themselves, that's a problem, and that problem has to be addressed. Now, if there are other ways to fund government, of course, we've looked at academically at, I think, most of them. I wouldn't say all. Somebody's always going to come up with a new idea, but you have to find a way to make it equitable for the citizens, not equal. Okay, equitable. Okay, and income level does drive that, and participation of all income levels in keeping the state moving forward was a part of what we wanted to. It's not the only thing, but creating $50,000 worth of income not taxed, that's the econometrics were pretty compelling as to how that benefited the state, and at $100,000, it was overwhelmingly competitive, overwhelmingly positive.
Jim, we've got a couple of questions from the audience that I'm going to wrap into one question, which is, one is, is Blueprint, is this a take it or leave it type proposal, or are you expecting other things to happen to it? And two,
sure.
Does this help resolve the urban versus rural divide in terms of tax policy questions in Nebraska? I'm going to roll that all in one, which is we've already stated, and I think I see Blueprint as sort of that first offering to the legislature. It's probably, I think it's bound to start the conversation on tax modernization, just like you intended. but nothing's set in concrete. And as to urban and rural, one of the things that I think differentiates this proposal from other proposals we've worked on for many, many years is the economic analysis and modeling behind it, and the ability to model urban versus rural. And why don't we finish out with that? Just what,
Sure.
are you confident that with this model, whatever the legislature does, there's the ability to create something that's fair across the state, not just in Lincoln and Omaha?
Yes. So we took data from all 9 economic development regions as defined by the Department of Economic Development. All 9 of those regions have unique industries that drive them. All 9 of them, encompass parts of the state that are different from each other. The data for all 9 show that under the circumstances that we offered for evaluation, that every one of those economic development regions benefits from the choices that were made, the trade-offs that we made. This is the go-in question that we posed, the go-in requirement that we posed was that the state must benefit border to border and coast to coast. That is, no one can be left behind. Now, is it a take it or leave it? Of course not. We made some choices which were made for the benefit of conforming the outcome to support the Blueprint plan. Those 15 elements were our guiding principles. There will be other guiding principles that will come into the conversation, and as a result, this plan was designed to do really only one thing, which was to stimulate conversation as a mechanism by which to show to the legislators that we can do it differently going forward. The thing that's required is the courage to be bold and principled. And in the legislature, courage and bold and principled often don't go together in the way that's necessary in order to move big changes of this sort, through. We're going to need leadership from the governor's mansion, without question. We need to think less of this change as being a tax increase and more of this as being an opportunity to redefine how Nebraskans move forward and create prosperity for the citizens across the state, in all parts of the state, not just Lincoln and Omaha.
No, Jim, we've run out of time, but I appreciate this. And I think I'm going to ask you to come back. We'll have a new governor. The legislature will reconvene next year. We'll be taking a new look at a new set of economic circumstances. It's probably be a good time to come back and have this conversation.